So let us begin with the last part of the accounting cycle. The last part of the accounting cycle is what we call the closing process. It is done once a year after the financial statements are prepared. So it's always done after the closing of a particular company's year, whether it be a calendar year or a fiscal year. The closing process is put into place so we can, I want to use the word reset, certain accounts to zero so we can keep track of only 1 year at a time. Those accounts that we reset to zero are revenue, expenses, and the dividend account balances. Each of those are either debited or credited based on their normal balances, and then those balances, once they've been zeroed out, are transferred to retained earnings. So effectively what we're doing is we're transferring revenue and expenses, and we know that revenue minus expenses equals net income. So we're putting net income into retained earnings permanently. You might recall that when you do the statement of retained earnings, that we put net income there to come up with our business ending retained earnings statement. So we're going to now put that net income there permanently. In that statement of retained earnings, we also decrease dividends, and so we're going to put that permanently into retained earnings. So what we want to do now is I want to go ahead and show you what that might look like. So as we move to the next slide, we can see that Circle Films has provided us a trial balance. This is an adjusted trial balance. You'll see here that we have assets, we have liabilities, and then equity. Here down below you'll see that we have the income statement accounts. The income statement accounts are the only accounts that we close. So it's only going to be revenue and then all of the expenses plus the dividend account. So any account below retained earnings gets closed in the closing process. In this particular trial balance, it doesn't have a retained earnings account because we just started, but typically you will see common stock and then retained earnings. So anything below retained earnings gets closed because we are going to take each of these items and put them in to the retained earnings account. To do that, take a look at the right-hand side. We have debit and we have credits. So the first closing entry is that of service revenue. We debit revenue, $8,500, so we always close revenue first, and we credit retained earnings. Because service revenue is a credit balance, to make it zero, we need to debit it. The second closing entry is that of all of the expenses, as you can see here. We credit those, we then add them up, and that becomes our debit entry to retained earnings. This number represents total expenses. And then our third closing entry is that of dividends. We debit retained earnings and we credit dividends. I'd like to now go to an example in the book and work through it with you because I think that's the best way to really visualize this. So I'd like you to turn to page 102 and it's exercise 22. What you'll see for Sparks Electricity is a partial adjusted trial balance. It's only partial. You'll notice there are no assets, liabilities, or common stock on it. All it's given you is retained earnings, service revenue, and then the expenses, and of course dividends. So I'm going to take those balances here and I'm going to make some T accounts with them. I'm just going to transfer what's on the trial balance to these T accounts. The first one, and I am going to abbreviate, would be retained earnings, and that's a credit balance account, so that's $17,150. I'm then going to do service revenue, and that is $30,500. We'll then go do advertising with $1,200, depreciation with $10,750. We then have interest of $560. We have salaries of $5,000, and I apologize if you hear that. That's my computer. Then we have supplies expense of $2,500. And I believe last we have utilities in the expense category. And we have dividends for $1,000. So all I've done is taken the trial balance and positioned them in their particular T accounts. So after I've done this, now I can demonstrate how we close. We first close revenue, and we do that by, and I'm going to use the T account. Watch this, I have an eraser. Pretty cool, huh? Okay, so we do credit here. So if I want to close revenue, and to close is to bring the accounts to zero, I would need to debit this $30,500 to make that statement true. So I come over here and I debit service revenue $30,500 and I credit retained earnings $30,500. So I've moved revenue permanently for the year to retained earnings. The second closing entry is close expenses. And to close expenses, I'm going to put retained earnings, but I don't know what that is until I've closed all of the expenses. Once I do that, then I'm good to go. So then I'm going to do a $1,200 here for advertising to bring it to zero, $10,750, bring it to zero, $560, zero, $5,000, zero, $2,500, zero, $2,080, zero, and that is what I need to do now. I need to move each of those to the credits. So I do advertising, $1,200, depreciation, $10,750, and you guys thought my writing on the board was bad. Interest, $560, salaries, $5,000, running out of room. Supplies expense, $2,080, and I'm going to squeeze in utilities up here of, oh no, supplies expense was $2,500, so now I have to go back here. I love my little eraser. $2,500, and then utilities, which that looks pitiful. Pitiful, Rhonda, pitiful. Utilities would be $2,080. To come up with the debit entry, we're then going to add these, each one of these, we're going to add up. Go ahead and take a minute to do that. When you do that, you should get $22,090. That represents the total expenses for the year. So we go ahead and we put that into retained earnings. So in retained earnings, we have beginning, we have expenses, and we have revenue. So we have one more closing entry, which is to close the dividend account. Remember, to close is to make them zero. So I'm going to debit retained earnings because that's always the offset for closing entries. And I'm going to credit dividends for $1,000. So by doing that, I'm then going to go up to retained earnings and put the dividends in. After I've done this, I then can prepare what we call a post-closing trial balance. The post-closing trial balance will only have on it the balance sheet accounts only. You'll have no income statement accounts. Your last account will always be retained earnings. And you don't have any income statement accounts because you can see here we've made them 0. So if you take a look at page 96, you'll see an example of a post-closing trial balance. You'll see cash through accumulated depreciation are your assets. Your liabilities are interest payable and notes payable. And then you have 2 equity accounts, common stock and retained earnings. And retained earnings will always be your last account in your post-closing trial balance. To the next slide, we see the accounting cycle summary, and you can see here, this is what you've learned to date. Journalizing and posting transactions, preparing a trial balance. Remember, the purpose of that is to make sure our debits and credits equal. Journalizing and posting adjusting entries. You should be getting better at that. Preparing the adjusted trial balance to, again, make sure your debits and credits equal. Prepare the financial statements. And now what we just learned, to journalize and do the post-closing entries and prepare the post-closing trial balance. So obviously you will have some assignments, 2 assignments in Cengage. I believe it's Chapter 4, Part 2 and Part 3. One problem, I believe the Part 3 one, is the full accounting cycle. And students tend to really like that because it kind of brings, it's a little bit challenging, but it brings everything full circle. One thing I wanted to do before I close is how can I double check what was in that retained earnings statement to make sure that it was correct. And if I reproduce it, it was $17,150. We had a $1,000 debit for the dividends, $22,090, and $30,500. We got a balance of $24,560 when we added those numbers, which is our ending retained earnings. So if I did a quick back of the envelope retained earnings statement, I would start with beginning retained earnings plus net income minus dividends equals ending retained earnings. So if I do that, I take $17,150 plus net income, which would be the revenue minus the expenses, which gives us $84,10, minus the dividends, gives us $24,560. Voila, we balance, and this is the number that will appear on your post-closing trial balance as well as your balance sheet. Have fun with this, and I'll be back in Chapter 5.